Hello everyone and welcome to another video on accounting. We are going to discuss inventory costing methods in this video. There are two inventory costing methods. We will talk about the first of them. Now I will walk you through an example to help you understand why we need inventory costing methods. So here is a point to consider. You see this box, and I'll tell you why I need this box. So on October 3rd, I bought 5 staplers at $5 each, and I put those in this box. Couple of days later, I bought some more, but the price this time was $6. So I put those five more in the same box. Now, a day later, I sold 3 staplers. So a customer came and wanted to buy 3 staplers. So I know that the sales revenue is 30 because I sold 3 at 10. Now, when I gave the customer the staplers, I went into the box and grabbed 3 to give to the customer. Now I need to know what is the cost of those 3 staplers to me. Or did I pick up, when I picked up from this box, did I pick up the $5 staplers or the $6 staplers? Now, the answer to this question would be very easy, but it makes it two things make it complicated. Number one is because all staplers are the same, identical. So I don't know which stapler did I pick up, the $5 ones or the $6 ones. Additionally, the cost of those staplers is different. Some are at $5, some are at $6. If the cost of those staplers were all $5 and I picked up 3, we already know that the cost would be 3. So this makes it problematic to calculate the cost of goods sold, the cost of those 3 staplers. Therefore, I cannot know my gross profit also. Similarly, the 7 that are still left in that box, what is the value of them? Are they $5 or are they $6 in the box staplers? So that makes it a problem. So I hope you understood the point. Let's continue with the example. On October 11, I purchased 3 more, and this time the price went to $6.10. Again, I put them in the box. And a few days later, I sold some more staplers, 4 of them at $10 again. So again, I know that my revenue is $40. Now, the question is, what is the cost of those 4 staplers that I sold? So when I picked up the staplers from this box, did I pick up the $5 staplers, the $6 staplers, or the $6.10 staplers? Now, again, the since the all the staplers are the same and the cost is different, this makes it very difficult to calculate the cost of goods sold, and therefore I cannot calculate the gross profit. Similarly, the stapler still in that box, what is the value? Are they $6, $5, or $6.10 in there? Now, we need to answer the two questions. What is the cost of the staplers we sold, and what is the value of those still in the box? Now, we can answer this question by looking at a method. So there are two costing methods, first in, first out, and the second is weighted average. In this video, we will talk about the first in, first out. So do watch the second video to talk about weighted average. So what is first in, first out? Now, first in, first out, as the name implies, states that inventory purchased first is considered sold first. So therefore, it becomes the cost of goods sold first. Now, so let's go back to that example to help us understand which one did we sell and what's the cost of those items. Now we will answer that same question we just talked about using the first in, first out. So when I bought these purchases, I put them in the box, the $5 ones. Similarly, I'm going to put the $6 purchases in the box. And when I sell 3 of them at $10, I know the revenue is $30. But what is the cost of goods sold? Now, according to first in, first out, whatever I bought first, date wise, you have to look at it. So whatever I bought first will be considered to be sold first. So when I picked up the 3 staplers from the box, according to Fifo, I picked up the $5 staplers because those are the ones I bought first, so I will sell them first. So the cost of goods sold is going to be those 3 from $5. So it is going to be $15 would be the cost of goods sold. Therefore, the gross profit will be $15 as also. So hopefully you understood that. The revenue is 30. When I picked up 3 from the box, FIFO thinks that I picked up the $5 staplers because those I purchased first before the $6 ones. So those will be considered the cost of goods sold. What about the remaining 7 staplers there? Since 2 are still left from October 3rd purchases, so that's 2 at 10, 2 at 5, so that's 10. And all of the October 8 purchases are left, so that's 5 at 6. That will give us a value of 40. So we have answered this question. What is the cost of goods sold and what is the ending inventory using first in, first out? Let's continue with the example. So when I buy more and put those in the same box, and when I make a sale, I know my revenue is 40, but what is going to be my cost of goods sold? So when I pick up those 4 from the box, according to first in, first out, the ones that I purchase first will be considered to be sold first. So my first purchase was October 3rd. Now from those, I sold 3, so I still have 2 there. So I'm going to take 2 from the first purchase, that's 2 at $5, total 10. And since I sold 4, I need another 2. So according to FIFO, the 2 that I picked up from the box are the $6 ones because those are purchased next. So that will be $12. That will give us our cost of goods sold as $22. So our cost of goods sold will be $22 and the gross profit will be $18. What about the ending inventory? Since what the ending inventory means, the staplers that are still left in the box. Now we know that the October 3rd purchase is gone. October 3rd purchase is gone. October 8th purchase, we sold 2 from there. So we still have 3. 3 at 6 is there. And we have all the October 11th purchase, which is 3 at $6.10, giving us $36.30 as an ending inventory. So first in, first out helped us answer the question. So why do we need those methods? Again, when the items the business purchase are identical and the cost of those items are different, we need to come up with a method to find what is the cost of goods sold and what is the ending inventory value. So let's look at an example and see how it is answered in real life. Here is a practice question. On August 1st, the first table is for the purchases, the second table is for the sale. So August 1st, 3rd, and 17 are the purchases. 10, 15, and 20 are purchased on those dates. And you can see that the cost of those are different, $91, $106, and $115, giving us the total different costs. So we purchased 45 units at a total cost of 4,800. Now looking at the second table, we sold on August 14, 20 of them. The sales price was 130, so our revenue is 2,660 for the first sale. On August 28, we made another sale, this time 14 of them at $150 each, so the revenue is 2,100. So we sold 34 units and the revenue is 4,760. Now the question to answer is, what is the cost of those 34 units? And the ones that are still remaining, because we bought 45, we should still have 11 with us in the inventory, say in that box. What is the value of those 11 units? We need to answer those questions so that we can calculate our gross profit. Now, to answer this question, we need to prepare in real life. You will prepare what is known as an inventory schedule. This is how an inventory schedule looks. So we have a column for dates where we are going to enter the dates chronologically. Um, then we have a column for purchases, a column for cost of goods sold, and a column for balance. Each of those columns are subdivided into unit cost, and total. So we are going to look at our question and fill this table according to the date. Since it's first in, first out, we are going to look at those dates as well. So all our purchases and sales were in August, so the date will be August for the month of August. Let's record our first purchase. Our first purchase was on August 1st. We bought 10 at $91, so that's $910. So remember, whenever we fill the purchases column or the cost of goods sold column, we have to update the balance column as well. So let's move this into the balance column. So 10 at 91, 910 is moved to the balance side. On August 3rd, we bought some more. This time we bought 15 at 106, 1,590. Let's move that into the balance side as well. Now the next date that we have is August 14, and that's when we sold some units. Now we need to know what is the cost of those items we sold. So we sold 20 of those items. Now, according to Fifo, whatever we bought first, we are going to consider them to be sold first. So since we sold 20 and our first purchase is 10 units, so we are going to take all of those 10 units and consider them to be cost of goods sold. We sold 20, so 10 will come from the first purchase. We need another 10. That 10 will come from our second purchase now, which is at $106. Now, so FIFO, we took the first purchase, and since we sold more than what we had, we went to the second purchase and took the rest from that. Now let's update the balance. So since we sold the first purchase is gone, from the second purchase of 15 units, we sold 10. That leaves us with 5 units at 106. That's 530 in total. Let's continue to update this table. We bought some more again on August 17, 20 of them at $115 each. That's 2,300. Let's move that to the balance side. And now we sold again on August 28, and this time we sold 14. So now we need to answer this question: which ones were sold? Since we are using FIFO, and which means first the ones that are first purchased first are considered sold first, we are going to use the first purchase, which is 5 units. So I'll take all those 5 units because I sold 14. Since I sold 14, I need another 9, and I will take that from the next purchase, which is 20 units at 15. And let me update the balance. The 5 is gone, that is sold. From 20 I took 9, so I still have 11 left with me there at $115. That's a total of $1,265. Now we have reached the end of the question. Time to total all the columns. So the total for the purchases is 45 units at $4,800 total. And since we sold 34 units and the total cost of those 34 units is 3,535. And what is the balance that is left? The balance left is 11 units at 115 at $1,265. Now, this is our cost of goods sold. This is what we were looking for. And this is going to be our ending inventory as well. So we have answered the question, right? So what is the cost of goods sold? 3,535. And what is the ending inventory? $1,265. Now let's prepare our income statement, which is to prepare the gross profit. So our sales revenue, copying that from the question, 4,760. What is our cost of goods sold? That would be this figure, 3,535, leaving us with a gross profit of 1,255. Now then you will list all your other expenses to deduct from gross profit to arrive at net profit. So in real life, we prepare this inventory schedule to help us answer the question of what is the cost of goods sold and what is the ending inventory. Now, last topic on this, what is the effect of FIFO in times of rising prices, in times of inflation? Currently, we are experiencing inflation everywhere in the world. So what is the impact of FIFO in this case? So now FIFO is used what to find out the value of ending inventory. So what FIFO does is that it reports higher inventory value, ending inventory value. Reason is because FIFO thinks that what we bought first are considered sold first. Since first purchases in the times of inflation, the first purchase is less expensive and the later purchases are more expensive at higher prices. So the inventory value, the items that are not sold will be at higher prices. That means it will be higher inventory value. So that higher inventory value goes to the balance sheet. The impact on the income statement would be since FIFO says that what we buy first will be considered first, and the first purchases are usually at lower prices, so it would give us a lower cost of goods sold. A lower cost of goods sold means a higher gross profit or higher profit. Both of them will be shown on the income statement. So the impact of FIFO on the income statement and the balance sheet is so on the balance sheet, it will report higher inventory value. And on the effect of FIFO on the income statement is that it will have lower cost of goods sold and higher profits. This was FIFO. Hopefully the video was helpful. Watch this video and other videos on the channel. We will be making another video on the second method, which is the weighted average method. So do watch that. But remember to like, subscribe, and click the notification button so that you receive the future videos. Hopefully, I will see you in the next video. Take care.